The stock market is a fickle beast, constantly shifting and evolving. It can swing wildly on rumors, speculation, and even the slightest hint of news. GameStop, the video game retailer, has recently experienced this firsthand in a dramatic fashion. Its stock price surged by an impressive 20% in after-hours trading on February 14, 2025, catching many by surprise. The reason behind this sudden spike? Whispers of a potential foray into the world of cryptocurrencies, a move that could redefine the company's future. This sudden surge in investor interest wasn't entirely out of the blue, as GameStop has been making headlines for various reasons over the past few years. GameStop has been on a roller coaster ride for the past few years, with its stock experiencing extreme highs and lows. Remember the short squeeze of 2021? It was a pivotal moment that brought the company into the spotlight. Retail investors banded together, sending GameStop's stock price soaring to unprecedented levels. This time, the catalyst seems to be a different beast altogether: the potential of blockchain technology and the allure of digital gold, Bitcoin, which has captured the imagination of many. The question on everyone's mind is whether this latest surge is just another meme stock frenzy, or if GameStop is genuinely positioning itself for a future powered by crypto. To understand this, we need to delve into the source of the speculation and examine the driving forces behind GameStop's potential crypto pivot, which could be a game changer. Could this be the start of a new chapter for the company, one that sees it transform from a traditional retailer into a digital asset powerhouse? Only time will tell. However, one thing is certain: the world is watching, eager to see what GameStop's next move will be, and how it will navigate this new and exciting frontier. Rumors can make or break a company's stock price, especially in the fast-paced world of finance. The power of speculation cannot be underestimated, as it often drives market sentiment and investor behavior. On February 14, 2025, a report from CNBC sent shockwaves through the market, igniting a flurry of speculation around GameStop. The news spread like wildfire, capturing the attention of both seasoned investors and casual market watchers. The report suggested that the video game retailer was exploring strategic investments in cryptocurrencies, including the king of crypto itself, Bitcoin. This potential move was seen as a bold step for a company traditionally rooted in physical retail. While the report acknowledged that GameStop might not ultimately pull the trigger on these investments, the mere suggestion was enough to send investors into a frenzy. The market's reaction was swift and intense, reflecting the high stakes involved. The potential for GameStop to diversify its portfolio and tap into the burgeoning crypto market was too enticing to ignore. Investors were eager to see if this could be the catalyst for a major turnaround in the company's fortunes. The CNBC report acted as a catalyst, amplifying existing whispers and speculation surrounding GameStop's crypto ambitions. Analysts and commentators quickly weighed in, offering their takes on the potential impact of such a move. Investors, still riding high from the meme stock frenzy of years past, saw this as a potential second coming. The excitement was palpable, reminiscent of the days when GameStop's stock price soared to unprecedented heights. The possibility of GameStop transforming itself from a struggling retailer into a crypto titan was too good to pass up. The narrative of a company reinventing itself in the digital age resonated with many. This wasn't the first time GameStop had flirted with the idea of crypto. The company had a history of exploring innovative avenues to stay relevant in a rapidly changing market. The company had previously dipped its toes into the NFT space, launching a digital wallet and hinting at broader blockchain ambitions. These moves were seen as initial steps towards a more tech-savvy future. The CNBC report, however, took things to a whole new level. It suggested that GameStop was serious about making a significant move into the crypto arena, potentially altering its business model. The implications of such a shift were profound, sparking debates and discussions across the financial world. The question remains, was this just a case of market overreaction to a rumor, or was there fire behind the smoke? Investors and analysts alike were left pondering the true intentions behind GameStop's potential crypto ventures. To answer this, we need to understand the key players involved and the potential motivations behind GameStop's crypto aspirations. Only time will tell if this is the beginning of a new chapter for the iconic retailer. Ryan Cohen, the enigmatic CEO of GameStop, has become a cult figure in the world of finance. His every move is closely watched by investors and analysts alike, eager to decipher his next strategic play. Known for his bold moves and unconventional approach, Cohen has been instrumental in GameStop's recent transformation efforts. His leadership has been a driving force behind the company's pivot from a struggling brick-and-mortar retailer to a tech-savvy, e-commerce powerhouse. His actions, often shrouded in mystery, have a way of sending ripples through the market. Each decision he makes seems to carry a hidden message, leaving the financial community in a constant state of speculation. One such action that sent the rumor mill into overdrive was a seemingly innocuous photo posted by Cohen on X, the platform formerly known as Twitter. The image, simple yet provocative, left many wondering about its deeper meaning. The picture showed Cohen sharing a coffee with Michael Saylor, the Bitcoin bullish CEO of MicroStrategy. This meeting between two influential figures in their respective industries was bound to attract attention. This seemingly casual encounter between two titans of industry was all it took to spark a firestorm of speculation. The financial world buzzed with theories about what this meeting could signify. Investors and market analysts immediately began dissecting the implications of this meeting. Was it a sign of a potential partnership, or perhaps a strategic alliance in the making? Was it merely a friendly catch-up between two CEOs, or was there something more brewing beneath the surface? The timing of the meeting raised even more questions. The timing of the meeting, coinciding with GameStop's rumored crypto exploration, seemed too perfect to be a mere coincidence. It hinted at a possible new direction for the company. Cohen, known for his strategic silence, did little to quell the speculation. His refusal to comment only added to the intrigue, leaving everyone guessing. His cryptic social media presence and deliberate lack of public statements only added fuel to the fire. Each post, each silence was analyzed for hidden meanings. The market, hungry for any hint of confirmation, interpreted his silence as tacit acknowledgement of GameStop's crypto ambitions. Investors were eager for any clue that could validate their theories. Cohen's meeting with Saylor, whether intentional or not, had a significant impact on market perception. It was a catalyst for a wave of speculation and excitement. It fueled the narrative that GameStop was serious about entering the crypto space, and that they were seeking guidance from one of the industry's most prominent figures. This potential shift in strategy was seen as a bold move. This perceived association with Saylor and his Bitcoin-centric company, MicroStrategy, lent credence to the rumors and further fueled the surge in GameStop's stock price. The market's reaction was swift and significant, reflecting the high stakes of Cohen's cryptic moves. Alright, so let's dive into the potential investment strategies that GameStop could consider. First up, we have direct investment in established cryptocurrencies like Bitcoin or Ethereum. This strategy, while straightforward, comes with its own set of risks and rewards. Another option could be creating their own cryptocurrency. This would allow GameStop to have more control and potentially create a new revenue stream. However, it would also require significant resources and expertise. And then there's the possibility of investing in blockchain technology itself. By integrating blockchain into their existing infrastructure, GameStop could enhance security and transparency, which might appeal to their customer base. Lastly, they might consider partnerships with existing crypto firms. This could provide a way to leverage existing technology and expertise without the need for a massive upfront investment. So there you have it. Each strategy has its pros and cons, and it will be interesting to see which path GameStop decides to take. Stay tuned as we continue to explore the exciting intersection of gaming and cryptocurrency. As GameStop embarks on this transformative journey, it's crucial to understand the power of innovation. The potential for growth and adaptation in the ever-evolving digital landscape is immense. By leveraging new technologies, GameStop can redefine its market position and create unprecedented opportunities for its stakeholders. GameStop's recent performance has shown promising signs of resilience and adaptability. However, the road ahead is filled with challenges and uncertainties. Strategic planning and bold moves will be essential to navigate this complex environment. The company's ability to innovate and stay ahead of market trends will determine its future success. Now, let's explore the potential impact of crypto investments on GameStop's future. Cryptocurrencies offer a unique opportunity for diversification and growth. By integrating crypto assets, GameStop could tap into a new and expanding market, attracting a broader audience and enhancing its financial stability. It's a bold move, but one that could signify a new dawn for the company. GameStop stands at a crossroads with multiple paths leading to vastly different futures. The decisions made in the coming months will be critical. Will GameStop embrace innovation and adapt to the changing landscape, or will it cling to traditional models? Only time will tell, but one thing is certain: the choices made today will shape the company's destiny for years to come.